The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour this Friday, the August the 9th. Oh, time's flying. Summer's almost gone. Actually, feels like summer's gone already with all this rain. But it'll cool down. It'll stop in time for tennis later this afternoon, I'm sure. Are you listening? All right, here we go. Thank you, Steve, and thank you, Daryl. Great shows. 2 hours of tremendous information. Great recommendations. Love that. So today being Friday, of course, Nico DeHaan comes on. Then you've got Daryl Martin back again. You got Dave White. Oh, I'm going to talk about something. I better do it right now because I'm going to forget. In the art of the charts, in the software package I've got right here, yesterday, up comes United States Steel Corporation, X. This is a stock I've been following for a long time with another one in the same area. It was on my buy list, as my subscribers know. I'd forgotten to look at it yesterday, and then it showed up. I didn't put it on as a buy. There were a couple of reasons, because we've got a lot of positions. I wanted to see how they played out, a whole bunch of things like that. So for all the positions are working out very nicely. But it was on as a buy, and look at this. This is now, I don't know if you can see it. Maybe it's overlapping. Let me just check here. Is it coming up? A little behind there. Yep, that's right. My engineer says looks like one of David White's charts. Absolutely, that's what it is. One of David White's charts. It's in the art of the trade. Of course, David was the programmer for this. He did all the work, based a lot on Tom O'Brien's methodology. Look at this. X. And now look what it's done. I wouldn't have got it. I'm going to be absolutely honest with you, because I would have wanted a little bit of a pullback before I entered the trade. That was yesterday. It closed on the 7th, that's 3 days ago, at 17.19, and it's been on my list for a long time. I believe we actually tried it at $18.67, took a 20-cent loss back on the 30th of July. Yep, there it is, right there. So that was a tad early. In fact, at 1867, that was on the whatever it is of July. There, let's go on. Oh, right over there. Oh, it wasn't a bad thing. What happened was I didn't want to give it too much room. 1686 was the low. I was going to give it 2 points. No way. So we got out. So I like to keep our losses very small. It means that sometimes we miss big gains on the upside, but you know what? Capital preservation is absolutely imperative. So it closed at $17.19. Now, I'm going to cover this up. Let me just do that right there. Actually, better than that. I'm just going to cover it. I'll do a vertical line, and I'm going to show you something right here. And just to make it really interesting, I'm going to put weight, make it very fat, and then I'm going to also make it dark. Okay, so we have no idea what's coming up here. Let me open up the chart so you can see what's going on. Oops. Open up the chart. Now, I look at this and I'm saying to myself, aha, I did a little work on it. I had time to do it because the program actually comes out the previous evening. I looked at it in the morning, and I'm saying to myself, in the Chapman wave methodology, there's a pattern that we look at, and that is where you come down sharply, and you go like that, and then you make a lowercase h pattern. If the left side does not break the right side, it's very positive, because it says in the next rally you could go towards or even above the previous high. If it does it, that's really positive. If it doesn't, you can expect another H. That H becomes an M pattern. And that M pattern has the same prerequisites. If it cracks the most important left side low bar, in this case 1827, closes under it, that's negative. If we close above it, it's very positive because it says the second attempt, if you do it as an inverted reverse Y, it says that there's a really good chance that there could be a breakout. This time there could be a breakout to the upside rather than the downside, which means 19.70, the high of that peak C minus on the 22nd of May becomes very important. So I did my homework and I thought, okay, I'm going to give it one day. If it moves just a little bit above the candle high of Wednesday, above 17.43, but doesn't break the 9-period moving average, it gives me a chance to see how the stochastic and the MACD are doing. Well, what happened was it gapped up and it had a beautiful session, and all I had to do was to say, okay, once the trend is in motion, a trend is in motion, but I had no guarantee yet that if I had an entry, excuse me, I would have tried to make it 17.88, 17.80, somewhere around the 9-period exponential moving average, put a stop just below. I decided again to wait because if it gapped up, it's gone. I have to wait for something completely different. The idea really is that if I should have thought about it a little more. If it gapped up today, I should have bought the gap right at the opening, which was at 18.27. Why? Because if it gapped up and it failed, I've still got a nice cushion at the 1788 or 1786, because now it's moved up a little bit, the 9-period exponential moving average. So that was my reasoning. But why I wanted to mention this is we have some fabulous programs here. It's programs on TFNN. We also have wonderful analysts, and we all offer something quite unique. And this is very important because what you need to do is your own homework, but what the art of the charts actually does, it identifies for you and does a lot of the homework, in other words. So I thought I'd mention it. I like to give kudos to where kudos are due. In fact, 2 days ago, there was an article. I recognized the chef right away. I've only been to the place twice, maybe 3 times. It's a restaurant in Somerville, I think, around the border of Cambridge, called Oleana. And the reason why I've loved it, we've been there just on special occasions, and the reason why I love it is that the flavors are so unique to my palate, at least. I really love it. Anyway, it got a wonderful write-up, and they talk about exactly that. If I'm correct, the owner is a co-owner with a husband. The husband has the farm, and a lot of the stuff that they produce on the farm is used at the restaurant. There's kudos again, right here in the Boston area, Oleana's. So I just wanted to mention that H goes to an M. During the break, I'm going to set up my CD introducing the Chapman methodology to show you how it's explained in the CD for those of you who are fresh to this. But it still says that United States Steel Corporation, they are producers of cookies. Nah, steel company. And has a monthly chart which is just, if I said awful, I'd be actually praising it. It is beyond awful. But it is right now trying to find a base. And part of what I've been telling subscribers to my opening call is that we're being very selective here. We are short. We're short the Dow. We're short the S&P almost at the exact top, I believe. We are short one of the indexes that one of the sectors has had a fantastic move. We got stopped out for about a point, I think, 1.5 loss in one of our stock shorts. I was going to go back in today, but I just thought we've got a lot of positions. I don't like to have too many positions because I have to monitor them. So I left that off for today. We added something this morning, which is actually up a penny. Whoa, a whole penny from where we bought it. But I'm satisfied with what we've got, and we're in the gold sector as well. So when I'm looking at this, I say, where are there pockets of strength in this rotational correction? I believe it's a rotational correction. So with that said, I just wanted to give kudos to Dave White, to TFNN, to Tom O'Brien. It's really a nice program. Not everything works. There are a lot of stocks that I've gone against. But you've got to do your homework, and it identifies potentials. And if you do just a little bit of homework, a couple of minutes, you're on your way to a possible really good trade. So there it is. USX, X is the symbol. Nice trade. Great bounce. Because you would have had to get it at the opening at 1750. Well, the high today is 1872. That's about an 8.5%, maybe 9% gain in 2 days. That's very nice. Okay. Now, let's go through the numbers. Now, this is very important as far as I'm concerned. Why? Because when you're doing numbers, it's all very well to do the numbers. I think being Friday at the end of it, like we do at the beginning of the week, let's do it at the end of the week. I'd love to take your calls at 877-927-6648. But even more important, let me just do this. Get it out the way. The Dow is in a sell mode from a peak F-top. A peak F-top is where you've got to be really careful if it's identified with poor technicals. Those poor technicals immediately say, be careful. And what I said to subscribers this morning, the next 100 points to 1 point in the S&P, in the Dow Diamonds, the DIA, up or down is going to be really important. We are now underneath 15,405. I've been speaking about that for some time. I said if we would break underneath it, we don't even have to close under it. It immediately cancels one of the important chart formations. That's that oval pattern. Bam, it's gone. It introduces or reintroduces something that I'd spoken about, and that is the diamond formation. This diamond formation can often be quite lethal. It's not always a perfect diamond, sometimes a little lopsided, but if you identify it as a chart pattern that is saying, I have made a peak, if I get back, like a little bit of like a head and shoulders pattern, if I get back to that right side where the right side diagonal over there is coming in, and I start to break what is identified as support, you got to be careful, and that's happened. So I'm taking that out. That's gone. I'm keeping in, just for study purposes, to show you how we've gone about our trades in the opening call, why we put on these positions, what they mean, where, look, there's the new resistance. I'm sorry, there's the new support that is being broken. The falling axe pattern has a twofold implication. If you extend the line of that top series of lower highs, that's from peak E at 15,604 in the Dow, it gives you another set of support levels which have almost held to days being broken. I don't care if you reverse up at this particular point. 3 things are absolutely important. No, 4 things. One is you've got a peak F in the Chapman wave methodology. That is potent. If you learn how to use it, it is a potent tool. We've got a peak F in the S&P. When I get a unified series of peaks, it says, watch out below. The S&P has not broken down until it takes out 1684. I'll probably say 1684, but preferably 1676. I don't have the full comfort zone. But right now, the Dow has gone from a sell signal to a sell mode, even if there's a retracement back up today because of the way the pattern has worked out. I'll be back with all the other numbers. I'll just run them now as we're going to the break. I'll do them when I get back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. Basil Chapman. I'm going to take calls. Got a whole bunch of callers on the line, but I did promise a couple of things, and I'm going to do it right now, just before we take the calls. Dow is down 126. I was warning that you've got to be careful with this market right now. Excuse me, rotational, very select. I'm not even sure yet about gold. I have to tell you that. Yeah, I'm long gold, but I'll talk about it in a moment. You've got the Dow down 128 to 15,369. Broke that 15,405 level. Negates that Chapman Wave Storm formation completely. It also negates a whole bunch of things. It is negative, and I'm telling you now, it is really negative. I did an analysis last night, and I told my subscribers, be careful. The market might now start to lead the volatility index, and that volatility index means that it's got a lot of room to move to the 16s, 17s, 18s if it's going to go higher, which says be really careful, because the market could be pulling back, and only later will the VIX recognize what's going on. It's only up 69 right now, 0.69, 13.42. So that's, you got to be careful. S&P is down. Now it's down 945. It's a little weaker. It's a little stronger than the Dow, down 0.56% instead of 0.83%. And the Dow, it's at 1688. I'll go through all these charts in a moment. Comp index is down 15 at 3653. gold is, at this particular time, the GLD is up 23 cents at 127, and gold is about unchanged at 13.10. Now, I'm always a little behind on the dollar. I've got the dollar up 10 cents. I'm going to talk about that in a moment. I just want to get these numbers out. High-grade copper had a really good move, and a good move today so far is still in place. But it is underneath the previous highs. You've got to always put it into context. And until it breaks that arch formation, goes to higher highs. I'll see if we can get to it today. We've got a bunch of callers. So that's that. And we've got the final thing is, well, crude oil is at 105.09. Nice bounce. But it is the TLT, which is still only at 106.89, down 20 cents. It is not participating. Dow's down 145. Wow. This is exactly what I was fearing of. And that's the reason why we stayed in the major core positions on the short side. And I have to tell you, I'm a little nervous. Just quickly, the British pound has gone over the 200 period moving average of the continuous contract at 1.55. But this is E, maybe /A. I don't know yet. I'll try to get a little bit more to it. It's underneath the previous major high, sort of in a trading range, but absolutely in the monthly chart, it is just stuck in a trading range. Having made that H that goes to an M pattern, it's just messing around. I do believe it's going to try to go a little higher, and that concurs with what I'm looking at in the looking at the weekly chart right there. So now what I need to do is I want to go to John in Jupiter, Florida. Hi, John. How are you?
Great, Basil, and you?
I'm very well, thank you.
Okay, I'm looking to enter TZA.
Okay. So I'm going to look at, if you don't mind, I'm going to look at the IWM. And this is, once again, I did this on when I did Tom's show yesterday, and I did this when I was doing my show. The IWM has made a peak F. Now, this is a very interesting formation. If I have a chance during the break, I'll try to get to it in my CD so that folks who are new to my work can get to see the chart patterns. But it's really simple. If you're looking at this green line over here, that's the fast-moving average of the MACD. Not only did it cross negative at that peak D at 104.50 something or other, 104.95, but as the IWM Russell 2000 iShares ETF made the cup formation going back towards that top and then breaking it, E and then F, that's what I used to nickname it the double camel hump. It's just too complicated. It is the right shoulder failure or right arm failure of the stochastic. Now, let me explain that. I'm going to put the vertical lines right here, vertical line there, vertical line there. And it's the simplest thing. I need to just change the color so that you know that I'm looking at negative over here. So that's going to be other, and I'll make it pinky right there, change the color, right. Now you'll see that the vertical line, when the IWM went to 105.63 on the 5th of August, look how horrible the MACD and the stochastic were. They were turning down, but there was still room in one of the indicators that I love to use, and that indicator says that's why you've got to hold on a little bit before you do anything. Now, I had thought of going short to the IWM. I didn't do it, but I'm going to make a recommendation, and the recommendation would be to start a position right as we speak. And I'll be back straight after the break, and we'll continue looking at it because it's a very important indicator, the IWM Russell 2000 ETF, because very often the smaller caps get the money towards the end of a big move. I'll be right back with John, Paul, and Mike.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. I'm just doing this. Actually, I was so busy doing some chart work that I forgot to do this. Look, even on the 2-minute chart of the E-minis, it gave you a perfect low bar at 1687.50, and it ran up to a watt. Peak A, B, C, D, 4 peaks. That's where you got to be careful. 4 peaks is the high, and at 1696.25 plunges down to the low of 1682. I'd say that was 12 points very quickly. So just keep in mind, a nice technique to be able to learn. I'm going to go right now, and I'm going to go to John, back to John in Jupiter. Now, John, this is what I'm looking at. When I do the IWM, I would. Obviously, the best. Oops, that was a mistake. The best position would have been as it was hugging this 9-period exponential moving average, but it's really not a big deal. So 104.15, and now it's at 103.66. Even if it was a point, but it's 2 points, less than 2% from its all-time high. Here's my recommendation: the TZA, in fact, is a very fast mover. It is the TZA is the 300%, 3 times small cap bear shares. I'm going to suggest you start a little position right now at 25.46, And what I would recommend, 25.63, and today's high is 25.58. You start a small position now. If it crosses 25.63, you add another small position, but that position is considered a trading position. And that one, if it makes anything like 15 cents to 20 cents, must not, under any condition, take a loss. That's your trading position, and you're going to try, if it's possible, to enter the one that you're getting in at 25, 43, 44, 45. That's going to be your, hopefully, a core position. Only reason why I say that is that your stop, even though it's a TZA and it's a real quick mover, if it breaks in the next two sessions, that's not today. I'm talking about Monday and Tuesday underneath 24. Oh, let's make it 24.45. That's a point. I don't know if you want as much risk as a point, but because I'm looking at a potential here for the IWM, if I'm correct in assessing the weakness that we've just seen in every single index, I don't know yet whether the Q's missed making a new all-time high. They did by just a couple of cents, not an all-time high, I'm sorry, to make a recovery high for that leg D by a couple of cents. So many indexes are saying, be careful, that I'm inclined to say, start a position. My guess is that sometime next week, the IWM will be testing 102.70 to 102.40. And at that point, you'll have that comfort factor of the core position, and you'll have your trading position that you can maneuver around. Do you see what I'm trying to do? I'm trying to get you so that one is sleep at night, and one is watch closely. So I hope that helps you.
It does, very much. Thank you so much, Basil. Have a great day and a great weekend.
Thank you very much, and you too. Let's go straight to Paul in Boston. Hi, Paul, from Soaking Boston. How are you?
Yes, I heard about your tennis comment. You're going to be rewarded this weekend, though.
I hope so. I hope so. I need it.
Great weather, I'm hearing.
Yes. So you'd like to look at?
KKD.
Now, you have a position in this, right?
Well, I've kind of been looking at it since $6, but only took a small position in it.
Okay. Now, you had, well, I thought we spoke, and I thought you were going to add another small position. I guess not.
Well, you kept telling me to wait for it to fall back, and the thing's been...
Oh, I remember. Well. Yes, I remember that. Yes. Because you had a small position, I said now to add on, because it was way back. Wow, unbelievable. This has been going on for...
It's been channeling rather well in the last 3 months.
Oh, absolutely. Now, let me just explain something to you, because I think you're going to get your opportunity. KKD is Krispy Kreme donuts. Just to tell you the truth, I've never had one. They did open up here in Massachusetts. It was this huge fanfare. It was the IPO. And they came out, and they were an absolute flop in terms of the stock. I don't know whether it was a flop in terms of the company. Let me just go back. Yeah, it opened up back in, exactly 3 years ago today, this weekend, the 11th of August, 2008. Opens at 4.46, goes down to, and then what happens is it pops up to 4.72 on the 15th of August, and then it comes down a little bit, just has a little bit of a slide, and it goes to $1.07. So, gee, sometimes these stocks, it's amazing how that can happen. So at $1.07, it is up to almost, not 20%, it's up about, it's about 150%. Right? No, what am I talking about? 1,500%. So this is an amazing move up until now. So let's just get some action into it in terms of what we're looking at. The small position has done very well. And I do remember that I said to you, let's wait for a little bit of dip. But I thought I'd said if it crosses a certain point, you could start another position. But maybe it was someone else. I do remember saying that. I have no idea where it was and what the price was. So, now what I'm going to say to you is this. It's made a peak F. You've heard my comments all morning about that in the Chapman wave. Peak F is something that you have to respect if the technicals are failing, which they are in Krispy Kreme, KKD, trading at 21.16, up 12 cents, although the market is down. In a sense, it could be called a defensive play. That's number one. Number two it could also be considered at this particular point overbought technically in the daily, but the weekly chart has been walking that 9-period moving average. Actually, it's not even walking. It's been above it. It's in an F/C in the weekly chart. And the monthly chart is in a vertical move up to from the time it broke. Oh, I remember. This is that cup. It broke the high of 10.08 made in June of 2011. It pulled back and made a cup formation in the Chapman wave cup and ladle. That's the pattern that I always look at to go to at least a D. Well, it's gone to a D. It's making a doji candle, but the month is just 1 week old. So I can't tell you about the monthly yet. So here's what I'm going to suggest. I would not be buying it at this particular point, even if it goes a little. I don't think it's going to go much higher. I think if it breaks above 21, if it breaks above 21.74, the high of the 5th of August, my looking at the chart says there's a real good chance that the 22s are going to be really strong resistance. So you've got a point on the upside. I don't think I would want to play it. Why? I don't know. I can just say that my eye, based on the technicals in the daily, says that there should be a pullback. But it's been a leader, and I suspect that fund managers who own it would likely want to add to it because, in a sense, Krispy Kreme donuts, like Dunkin' Donuts, they, at least in the initial part of any weakening in the economy, I don't think people cut back on that, on the very low-priced commodities and food, not staples, but the food area. So I think that this still has potential. But what I'm going to recommend to you is don't do anything yet. In the next 2 weeks, if you see it go between $19 and $18, call me, because that's where there could be a chance to start a second position, more of a trading position, but a second position nevertheless, because $19.43 is the 9-period moving average in the weekly, and so far the technicals are holding really well, and they're holding well in the monthly. So I like the stock. You know, it's one of those things where when you identify something, what I call walking the 9-period moving average, you just have to jump in and buy it and say, I'm going to put a stop underneath the 9-period moving average. But it's really hard to find the courage to do that. I find I back away from doing that, and then I kick myself and say, oh, that was dumb. Look how it's just moving up. So I apologize for not getting you that next position, but I'm going to say to you, I think it's going to pull back between 20, somewhere between 20 and 19. Give me a call. Let's look at it again to see if it's worth getting in at that point. Okay?
Okay, very good on the technicals.
Thank you very much, Paul. I hope that works out. We'll try to get you back to add to your position. But your other position has done really well. Congratulations on holding it. Paul in Boston, thank you. Have a great weekend. Let's go to Mike in Long Island. Hi, Mike. How are you?
Good, Basil. Estee Lauder.
Okay.
I'd like to look at this. They report next week. And that other cosmetics company had problems.
Right. I have to tell you something. I've looked at this. I've got alternate wave counts. Everything to me says that it's unusual to go to Gs, especially a G in the monthly chart. But everything about the technicals, I'm not even talking about Estee Lauder, EL, the symbol, trading at 66.27, up 27 cents right now. I'm not even talking about it as a potential short or long, or a stock that I even know anything about. I'm looking at purely as a chart pattern, and everything about it says that the earnings report should be disappointing. Everything about it. But you know, I hate to trade based on a guess. So I'm going to say to you, purely on the technicals, it's trying to rally. I don't know what day what day it comes out. What day do you know? Earnings come out?
15th, but I guess what you're implying is wait until the earnings come out, and then we'll figure out, you know.
Well, I have two very distinct trades. The one is it's rallying now as the market's pulling back quite sharply, because I think it's looked at in that sort of defensive area. But my eye says that the trade really is to go short at 66.33. If there is an earnings surprise and it's up 12% or something, that's gonna start. In fact, if it goes 1 penny above 72.70, that's $6 away, 10%. That starts leg D, and then you got to be a little bit careful. But everything about the chart says, don't be afraid. Put on the short position and let the market tell you. But I have this, then earnings announcement, I don't know if it's before the bell or after the bell, but to be vulnerable to a sudden 10% spike, if that's going to happen to the upside, when you were looking at the chance of a quick 10% pull, it's not even 10, it's really $2. It's not even that. It's like between $2 and $3 down. If it breaks 64, this stock is done. It is going down. It's going to go down very sharply. So I'm trying to weigh whether you put on a short, and if it gaps up, you say, no, the technicals are still terrible. This will be coming back, and you just add to the short. I don't like to, money management is the way to stay in business. Yeah. So I don't really want to give you a trade. The 15th, what is today? The 8th. Oh, the 15th, you've got plenty of time. You know what? 15th is next Thursday. I'm going to make the suggestion. It's rallying right now at 66.34. You don't have to jump in now. But if this thing by Monday gets anywhere into the 66.80 to 67.50 area, I would put it on a short. And if it starts to pull back sharply, and then it gives you a 3-point gain, it means you've got at least 3 points on the upside if there's a 10% pop. You know what I'm saying? Because it'll pop then from, say, 65. So if it pops from 65 to 68 or 69, hey, it's not. That's the kind of percentage risk you would have put on your short in any case, right? About 2 or 3%?
Yes. Yeah.
So that's one way to think about it. And I'm going to suggest this. I'm going to look at it on Monday. So you do whatever you're going to do. I'll try to look at it again Monday, but everything about it says that this thing, my target would be the 62 to the 60 area, and that would be a first target, an Estee Lauder, perfumes, fragrances, and cosmetics. And I know I'm going against a trend, because this is a trend that women, I mean, there isn't a block around here that doesn't have those nails and all that stuff going on, you know, the pedicure, manicure, and all that stuff. So grooming is in. So I'm looking at this and say, if grooming is in, why has it gone from 72 down to the 64 area? I think there's something going on in the stock that's not good. So that's my assessment. I think Estee Lauder is going down. It's just money management, how you handle the risk. If it pops up just a little bit more, I would take a short position, but that short position would have a 1-point stop, because you want it immediately to take the short position. You want to see it drop 2 points before earnings, and then you've got yourself a cushion. If going into earnings is close to the 67, 60, 68 area, I'm going to have to say hold off, even though my eye says it's going down. The fragrance says be careful. So I hope that helps you.
Yeah, great. Have a good weekend.
And you too. Thank you for calling. Always appreciate it. So, folks, we were looking at Estee Lauder. You know, in the fashion area, these stocks that have anything to do with fashion over a period of time have had a fantastic run. Some of them, like in the apparel area, are starting to fail, and that's something we've got to watch real closely. It is a sign. Oh, the RTH index. I'm going to do that. When I get back, we'll look at the RTH index. That's this iShares sector's retail.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We are back. Basil Chapman, Tiger Technicians Hour. Okay, in this last second, this is what I want to do. There are a couple of things that I think are very important. The Dow has just gone within a fraction of the 15,336 in trough E, leg E. It might be trough E, we won't know yet, at least for a little while, in the Dow 120-minute chart. That's number one. It has gone to a lower low. The volatility index still has not gone above 1391 to start leg C. To me, this is something that I have to watch closely. Is it saying that that buying pressure is still there? If the buying pressure is still there, and the Dow's down 110, S&P's only down 740, and the Qs are, I can't see it right now, the Qs are down, what percentage? Let me just have a quick scan here. 1, 2, 3. The Qs are down 0.43%, about the same as the S&P. Then I have to say to myself, okay, you could be wrong. This could just be a high-level consolidation, but patterns are patterns. And look at that arch formation, beautiful arch formation that is being created in the daily chart of the S&P and the daily chart of the Dow. And that says be very careful, because those arch formations can stop on the way down on the right side, but it also says that the tide, I love to think of this in terms of tide, that the tide is really turning to the downside. Now, if that is the case, then what we have to say is, where would we be wrong? Well, it's just real simple. If the S&P cracks yesterday's high of 1,700 at any point, yeah, wrong, because it's probably going to retest the highs. I just don't know. I think this is a rotational market. I think that you've got to be, it's stock selectivity, number one, and it is index selectivity or sector, I should call it, index or sector selectivity, if a plethora, if the majority of stocks you're looking at, for instance, the one that I've identified as I think the weakest, one of the weakest coming off the top, all-time highs, record highs, is a particular sector I've been talking about for a while, and for my subscribers, we are short that via a 200% short ETF, and so far it's doing well, and all you can do is one step at a time. You see, normally when I get this peak F, you want to see exactly what I've seen. Let me just go to the this chart here. This is what I send subscribers. I give the Dow, the Diamonds 120-minute chart. I've got the Dow 120-minute chart there. I showed the left side, right side price time match here on the Diamonds. I've got the Dow chart that I go into tremendous detail every single day. This pattern is negated because what have we done? We've gone right to, where did that trend line come from? Oh, that trend line I think is a mistake. That trend line should be there. We've come right to, wait, whoa. I don't even know why that's there. That red line was from something. I don't know where it's from. But in the meantime, it is there, and the price of the Dow has just touched it, and we've made a lower high. Look what we've done. Almost every day we've gone to lower lows. Look, from the 5th, 15,584. The 8th, the 6th, 15,473. 15,421 on the 7th. And yesterday was down to 15,418. And today's a lower low, 15,346. I think the trend is changing. Can there be a rebound? Sure there can, but now that 9-period moving average with that little line I was talking about weeks ago, I said it's gone above, watch out, the upside is limited. And even when it spiked to 15,658, I was watching it closely, and now that little line is right there. It's still above the 9-period moving average. That 9 EMA, look at the Dow hit it exactly today and pulled off. So now you've got to look at what indicators are working as the tide changes. So I'll stick to the Dow for now. All I'm saying is a close today towards the lows, especially if the close takes out 15,346, the low that we've just seen, that'll be very negative, and that candle that I'd be looking at for support would be 15,258. That candle of the 10th of July is the next stopping point. So the stalk is out. Gringo, yes, we're done with stalk. It was a stay.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.